Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, I am up in Vancouver for the Metals Investor Forum and for the Vancouver Resource Investment Conference. And so I did 4 interviews today. Stay tuned. They'll be coming out. This is going to be a bit of an abbreviated episode because I got a lot more to go. So 3 more full days of interviews, and super excited about that, but I got a lot of prep to do. So anyhow, this will be a little bit of an abbreviated episode. And thank you to everyone that has reached out concerned over the fires that are going on in LA. Rest assured, we're about an hour or so from the fires. You know, we suffered a little bit of power outages here and there, but we're fine. House is fine. All our family's fine, and friends are fine. So thank you for the concern. I appreciate that. All righty, let's go to the charts. Starting out as always with the S&P 500. So the S&P is up 2.9% for the week. So this is interesting. Now, what we had here, I went over each day here, and we have what a tiny bit of a lower. So if I go right here, hovering over, now look at these numbers right here, and you can see that the high is 6021, and then right here, the high is 6014. So we have a consecutive lower highs. And then right here, the low is 5832, and the low right here is 5829. So not quite my point is generally angling down. Now, this last bar right here is going to be kind of interesting because it's not really showing one way or the other, up or down. So I'm kind of 50-50 on this, but I got to lean just a little bit more towards the downside. So maybe I'm not exactly 50-50. Maybe I'm closer to like 53-47, 53 to the downside. It's looking like it's just kind of sloping right down. The other caveat here is too, you've got the 50 moving average to catch it. And it's also broken above here on the RSI. So this is kind of a tough call, but I got to lean towards the downside on this one. I don't know that it'll come back up here to all-time highs. I think we might have found the all-time highs back up here, and that was 61.06. And the dollar, the DXY, is down 0.2%. We basically have resistance now, but it looks like it's probably going to go up next week. Now, the way we can look at this is if I go out here on the hourly, and you can see it even more if I go out on the 30-minute. And look at right where this green line is right here, and look at how many times it touches on that point. So we got 1, 2, 3, 4, and then we zoom in, and we had a breakthrough right there. So that's 4, 5, 6, 7, 8, and then kind of hitting it right now, 9. So a lot of points right here touching all along that same line. And, you know, so there is a decent amount of resistance where it is right now, but just looking at the price action, it looks like it's probably going to go just a little bit further before it starts to correct and have just a natural correction. But, you know, RSI is at 70. So if it did go down here, it wouldn't surprise me, but I think it's going up for the beginning of next week, at least. And gold is up 1.2% for the week. Closed the week at 27.40, so looking fantastic here. Now, what's interesting, right here on the hourly, we're catching on the 50, and up here, if we go to the daily, we're hitting on our previous resistance line right here, which is just lining up with where it was back in the beginning of December. So pretty interesting. It touched right on that and then came right back down. And again, if we go to the hourly, we can see that it touched right up on it and then came right back down. So kind of have a double top here. I think it's probably going to break to the upside on this one. I really do. It's probably going to go up a little bit. Now, that being said, caveat, I would be shocked if in 2025 we don't come back down and touch this 200-day moving average, right? I really would be shocked if we don't come back down and touch that. Now, the level that that's going to be at is going to be like right now, the 200 moving average is at 25.24. But, you know, 25.50 would be lining up with a lot of back support right back here. And this green box that I drew right here, the top end of the green box is 24.50 and the bottom end of the green box is 23.50. So that for me would be my best buy zone. If gold gets down into this green box, I would have a really tough time not buying a lot more. I would actually probably buy some more like physical gold. I'd probably be calling up Andy Schectman, right? If it got back down to here. Now, if it got back down into the 2000s where it has a boatload of support, I would seriously reconsider upping a pretty significant portion of my net worth into physical gold if it got down into here. I do not think that's going to happen. I don't think we'll see 2000 ever again in the US dollar. And you know, if we did, I would really have to question my thesis if it got down there. And that would be the kind of thing where, okay, well, how much of my net worth do I want in this thing? But this would be, I think, an ideal, amazing moment in time. I don't think it would last long, and I don't even think it'll happen. The odds of it happening down there, I think, would probably be somewhere between 5 and 10%. The odds of this happening, maybe 20, 25, something like that. And the odds of seeing 25.50 in that range and hitting the 200 moving average, I think kind of makes up the rest. But anyways, for the next week, I think gold will probably pop up just a slight bit. So then going to the GDX and the GDXJ, if we go to the weekly here, we can see that it's just kind of floating around the 50 weekly right here. So I think anywhere around that action is probably where it's going to iron out for next week. But we do have the RSI sloping down here. Depending on if the RSI bumps through this 14 moving average right down here, will dictate where it's going to go on Monday and Tuesday. But there is some bullish bars right here going to the upside. So bias for both of these is to hang around the 50 moving average, which is generally moving up. If it gets down to this green line here, I would look at that as a buying opportunity, which is around $33. Same kind of chart here with GDXJ, the juniors, and he retraces down here to around the 200 moving average, which right now is around $41, $40, 41, somewhere around there. I would look at that as buying opportunity, but this is looking kind of bullish on this chart here. So we'll go back to the daily here, hanging around the 200-day moving average. I think that this could probably more likely to the upside next week than the downside. Now, that being said, I don't think there's any buys right now in gold. You know, we want to see like low RSIs on these. So, you know, when we go back here to GDX, see how the RSI was down here. It got down like 29. And right now the RSI is at 56. Look over here on the purple over here, 56. Those aren't buys, you know, but probably up more next week than down. Silver is down 0.5% last week. So looking on this, it's just got some support right here on the 50 daily moving average. It's above the 14 moving average here on the RSI. So it kind of could go either way. My bias is slightly towards the downside on this one. We got a comment here on silver from Devin. It says, Steve, you seem to be confused about the silver bull market. You just had Michael Oliver of Structural Momentum Analysis on your show who explained silver technicals, yet you seem lost. Granted, silver is volatile, but the real risk is not building a position at today's prices before a run to $40 occurs. Oliver is correct when he says a bearish stock market can drive precious metals higher as a safe haven. I agree, sir. I think that silver will eventually repeat just like it did back here. Like, look at these runs back here, back in 1979 and 1980, got all the way up to $50. Now imagine how much that would be in today's inflated dollars. I mean, that was 45 years ago. So in today's inflated dollars, I don't know how many hundreds that would be. Maybe somebody could do the math and put it in the notes for us all below. And then this one here in 2011 just had a massive run up to $50 again. And how much has the Fed printed since then? What is it going to look like when we have another one of those returns here, right? I'm just trying to predict what it's going to do from week to week. My overall thesis is exactly like yours. I believe this thing is going to go to 50. And when it does, once it gets past like 35, 36 bucks, I think it's going to go to 50 in pretty short order, probably in a few months, and possibly even blow through that. My base case is it'll probably hit 50 and then maybe correct back to 40 and then kind of do a little thing like that and then off to the races up to a few hundred. But in the meantime, if you don't have any, I would probably get a position and get something, but I really think we're probably going to come back here, come back down, touch around maybe 28 bucks, 26.50, something like that. Like when we got back down here into the this portion back here when it was 18 bucks, this was a bottom that we called, and it wasn't anything psychic. I wasn't the only guy that was saying it's not going to go below here. And the reason was because when you look at the all-in sustaining cost of these silver miners, it was around $18. So either the price of silver went up so that those guys could stay in business and make money, or they started closing their silver mines, thereby reducing the available supply of silver. And then with the reduction in the supply coming online, then the price would go up anyways, right? So either way, it had to go up from there. I think we're kind of in a similar time right now in that, I'm sorry, not quite in a similar time right now, because a lot of these silver miners, their average all-in sustaining cost is around in the low to mid 20s. So this can correct down. It doesn't have to stay up here. There's nothing to say it can't correct down, and I think it will. But in the meantime, it's probably going to follow this 200-day moving average somewhere in there. And next week, it'll probably correct down a little bit. All right, SIL is up 0.6% for the week. So probably going to get a little retracement down here, down to the 32, right where we got this yellow line drawn. So this would be nice, I think, for if you don't have anything in this, a first little entry position. And then the next level of support down here is going to be just north of $30. I've got it at $30.18. SILJ is up 1.1% for the week. So I like a buy order down here at $9.75. I had one down there that hit. I did it manually. I didn't have a limit order. I got it in for $9.93. So anywhere kind of in that ballpark. And we're just looking at where a lot of price action is in the past, and it hit around $9.75, and then again around $9. So I like those as limit orders. And copper, paging Dr. Copper, is up 1.5% for the week. Now look at this action, what happened on Friday. So RSI got way up. Look at the MACD. See how the MACD's turning all blue like that? And then we just got this dark blue line right there on Friday. Now, if we go out to the hourly, we can see it kind of looks like a little bit of a topping pattern right there, right? So we're probably going to get a little bit of a retracement in copper here. I think it's more likely next week that copper will go down than up. And we can see that the RSI topped out there at 73 and then started to angle down and ended Friday with an RSI of 63. So we do have the 200-day moving average to catch it, but momentum is towards the downside. If it breaks this yellow line, then momentum will continue to push it down. But this trend line so far is still in place, aside from those few days where it pierced it like a balloon. And you'll see these two yellow lines that I drew down here, one at $3.65 and $3.56. And what that is this is the Sprott Physical Copper Trust. So it's trading at a pretty big discount today. It's no longer 17.3. I think it was 16.8. I got to update that. But basically what that means is that right now this fund, it costs $7.15 per share, but it's like you're buying copper at $5.98 a share, or copper right now is selling for $3.37 a pound, but it's like you're able to buy it at $3.65 a pound. This yellow line down here was what it was last week, so we're going to delete that. This is what you're paying for copper, $3.65 a pound right now, if you buy it on the Sprott Physical Copper Trust. So you're still getting a good deal on this, not as good of a deal as you were back here when it was 22% discount instead of 16.8, but still a pretty good deal. And COPX is up 1.7% for the week. So I like, like Adrian Day, like Brian London have said, you know, buy copper on weakness. Joe Mazumdar, he'll be out here at in Vancouver, so I'm going to try to snag an interview with him. And you know, they said buy copper on weakness. This is weakness right here, right? Weakness. Look at the RSI, got down into the 20s right here, got down on the dividend day, low 30s. That's your striking point. So we drew a yellow line right here for $38 on COPX, just an ETF of the copper miners, and then a stink bid down here at 36.25. But secretly, I'm hoping it gets completely washed out and we have a pretty good correction in copper, which I think we will. I think we're going to go into a pretty good recession, and I think it's going to get washed out pretty good, and it'll make these entry points look like child's play. But just in case it doesn't, that's weakness, and we fired. And uranium is up 0.5% for the week. So we are, up 0.5% for the week. Bias for next week is up. I'm not going too much by technicals on this chart. I'm simply going by the fact that, you know, the term price has been closing at in the low 80s, and the spot price is sitting here at 73.74, right? So I think I'm saying $73, $74. It closed the week at 73.95, but you know, close enough for government work. SRUUF up 0.6% for the week. Now, what I like about this, the discount right now is only like 6-7%, but the fact that the term price is so much higher than the spot price, I think that this is a good deal. Now, if banana to my head, if I had to put in a limit order, I would do it at $16.30. And your URNM is up 3.7% for the week. You know what? We did get one comment on the Sprott Physical Uranium Trust, and that was from Zanzibar. He says, I love trading SRUUF, and it's worked so far, Steve. But what's preventing the Sprott Physical Uranium Trust to be in a permanent discount? Can this arbitrage cherry picking somehow go against us? I get it fluctuates, but will it always? I don't know. I don't know. But it has worked for 3 years, and I'm going to continue to believe that it will work until it proves me wrong. I mean, there is the Yellow Cake Fund out of, where does that trade? I think it trades on the London Stock Exchange. Maybe somebody could tell us down in the comments down below, but I'm pretty sure that's where it's at. Anyways, that one consistently trades at a discount, and I don't know why, but it does. And this one seems to trade at a discount for a long time, and then boom, it goes to a premium, just like it did here, and just like it did when we were selling up here, right? And then we started trading at some massive discounts, so we bought more, and then when it went to a premium, we sold more, and right here, we backed up the truck again when it went to a radical discount, and the spot price was at $70 a pound. Term pricing was in the 80s, and the Sprott Physical Uranium Trust was trading at, I think, a 12 or 13% discount, so we bought it again, right? Rinse and repeat until it stops working. So I don't know why. I just know that it works, and so I keep doing it. Okay, URNM, and what were we up? We were up 3.7% for the week. So this one's kind of neat. This green line just seems to be working, right? So we drew this a while ago, and anytime we kind of get close to that, hindsight being 2020, it seems to be a good time to buy. Nothing to say that this green line that I drew just, you know, stops working. That was one of Amp's question. He was saying how I was talking about a head and shoulders pattern on Cameco, which makes up a big percentage. I think it's 17% right now of URNM. So if Cameco happens to get washed out, yeah, this is probably going to get washed out as well, and it's probably going to break that green line, but I don't think the bet's off if it does that. I think it just, you know, I think it's unlikely, but, you know, then it got cheaper, so buy it. URNJ is up 3.9% for the week. I think a good limit order is down here around 1850, just where you guys bought it right back here a couple weeks ago. And an even better order is $17.50. keep in mind, if we have some kind of recession, there's probably going to be a quick washout, just like we saw back here. There's probably going to be a quick washout, and then that'll be your time to really strike. And crude oil, WTI. Now, this is interesting. Okay, so up 1.1% for the week, although it doesn't look like it because we kind of had like a, that's not an island reversal, but it shot up and then just came right back down. Interesting bar there on Wednesday. Anyways, let me get rid of some of these lines here and then I'll clear this up for you. So we have this downward channel trend line right here. And then we have a spike above it, breaking that trend line. So we had 3 points that it broke, fourth time's the charm, went above and came back down. Now look at the RSI here, same kind of thing. So it went up, topped out here at 75, which, you know, is kind of where it tops out. That's generally the sell zone, and then come back down. So we're talking about running a short on this, and I was thinking about doing it with drip. And then as me and my trading buddies were looking at it, there was several days where crude oil went down, and I'm sorry, crude. And so drip is supposed to be like a 2x bear of WTI. Actually, it's a 2x bear of the oil companies that are in the S&P 500. So generally speaking, when oil goes up, drip should be going down, and then when oil goes down, then drip should be going up, and that's where you place the bet and you make money, right? Or you could do a put on that, but that gets kind of complicated. So anyways, it didn't really perform like we thought it would. It was actually following it, which was very strange to me. And so I didn't end up placing any kind of put on this. And on top of that, we've been flying out to Vancouver, and I've been doing a bunch of interviews and haven't been able to keep track of some of the options on this. So I just didn't place it. But if you're going to run a put on this, this should be kind of interesting. You want to pay attention to this trend line right here. You want to pay attention right here to this 400-day moving average. That could act as some serious support. And if we go out to the weekly here, okay, see how it hit up and then sliced right back through this 200 weekly. Not a coincidence that it hit there. And you have the 50 weekly right below it. So these are some of your major support and resistance lines. If you guys are going to run a put on this, this is what I would be looking at. Okay, XLE up 6.3% for the week. Just a boss. I was talking to the missus here before I pushed record, and maybe we need to trim our position a little bit here. We have the inauguration coming up here. We had a heck of a move in this thing. So I know a lot of you guys had $83. I had some clients in here for $83 right here. And look at this. So from December 23rd, when your limit order hit, until today, you're up 13%. I mean, that would be an amazing return over 2 years, right? And you just did it in like 3 weeks. Okay, so, you know, I wouldn't fault anyone for taking some profits there. Look at the RSI now. So when you bought it, when your limit order hit, the RSI was 18, and now it's 73, right? Nothing wrong with taking a little profits there, okay? I'm not sure if I'm going to do it in my account or not. I'll have to make that as a game time decision, but, you know, keep that in mind and remember this point. And look back over here. Look right here. Look right here. Look right here. There's some serious resistance where it's at now. Look at all these points right here, right? If you're going to take any profits in this thing, I think now is an okay time. All right, and ExxonMobil is also up 5.4% for the week. This one I'm not going to take any profits in. RSI is not quite as stretched. It's at 59. It's not in the 70s, right? So I think we still got a little bit more way to go. But look at this entry point right back here. I'm not psychic. I'm just reading the charts. I'm just doing what the charts are telling me. Look, RSI is 19. RSI is 20. That's a buy point right there. It's like we're talking with Elliott Yu. You know, that was a gift that Exxon gave us the other day, right? Or a few weeks ago. And, you know, I love this software. You guys can try it out for free. It doesn't cost you anything. There's a link in the pinned comment below and down in the show notes below. It's TradingView. It doesn't cost you a dime to even try it. And, you know, this is how you start out. Start out by just trying out the software. I set up a whole video on how I set up my charts and what they look like, exactly what buttons to click. If you go through the videos and you just, you know, type in TradingView, then it'll be the only one that comes up. And you can literally, it's an 18-minute video where you can literally just point and click and get the exact same indicators that I have here. And that's how you learn the software is you literally just start playing along and putting in little arrows and moving averages and try to predict what's going to happen. So check it out. All right, and natural gas is down 1% for the week. So look at that bar right there on Friday. That's impressive. So looks like natural gas is probably going to go down next week. Getting pretty stretched right here. So we had this line drawn right here at around $4. No reason other than an even number. There is a little bit of price action around that point, but even numbers seem to hold some weight with traders, and I think this one's no different. It did get all the way up to like 430, 420, but then just shot back down. So probably a little more downside in natural gas going into next week, just because it's getting pretty stretched. And if you zoom in here on the RSI, see that purple line's just starting to break the yellow line right there, then that means that it's more likely to go down than up. And Devon Energy is up 5.5% for the week. So finally getting some action here out of Devon Energy, although it looks like it's probably putting in a little bit of a short-term topping pattern here. See how that RSI is starting to roll over a little bit. It got all the way up to 68, looks like up in the 70s here. So probably going to get a little bit of a rollover. If this was your first entry point into Devon, you could take a little profits here. Nothing wrong with that. I mean, you had a 25% run down there since the $30 buy level, right? But for me, this is going to be a long-term hold. This is going to be probably 3 to 5 years. And in the meantime, they pay you a pretty good dividend. And Pado is down 4.9% for the week. So it had a nice rollover rate here. First level of support is going to be around $11 or so. What is it exactly? Look over here, right there on the purple for the 200, and it'll tell you exactly where the 200 is right now. And it tells you that it's at $11.07. So that's going to be our first level of support. Second level that I see is going to be right where our limit order executed back here at $10.65. So I like that for a limit order. And then I got a stink bid down in here for $9.75. Birchcliff Energy is down 4.8% for the week. Really like a limit order. I'm sorry, not a limit order. Well, yeah, it is a limit order, but a stink bid in for $3.15. So we got some pretty serious support in between here and there, and that will be the 50 moving average and the upsloping 20 moving average. But what I will be looking for here is what's called a retracement. So we run from the bottom here up to the top. This is the symbol that it looks like, and it just says fib retrace. Run it from the bottom of the top, 38% retracement. That didn't seem to mean anything. Got right down to the 50 almost, and then bounced up. But I think the sweet spot is right in between the 61.8 and the 50% retracement, which I had as drawn as these two kind of light blue dotted lines right here. So that's where I would be looking, somewhere in between $3.60 and $3.75. I think might be a nice little entry point. And thermal coal is up 4.1% for the week. Bias for that next week is going to be up, and that is simply because Matt Warder believes, our coal expert, that the bottom, the floor in thermal coal right now, or at least the last time we talked to him, was 110, and the ceiling is like 170. And on top of that, look at how in the dumps the RSI got. I mean, down to 16. How often do you see that? So I think it's more likely up than down next week. And met coal is down 2.2% for the week. So kind of went into a fib retracement, and then it's kind of in that zone a little bit, but not quite. Bias for this week is sideways to down, and if you can just see, the price action is generally going down, so it's probably going to continue sideways to down next week. And our favorite coal ETF, so we had that limit order that we had set forever, finally hit at $20. And look at that, RSI 17. How often do you see that? Well, apparently pretty often, because I just mentioned like 4 of them that did it. But anyhow, got that one in there right on that green line. If you don't have any of this yet and you want some coal, this is a real easy beta way to play it. And looking back, if I had just played this instead of AMR, I'd probably be doing a lot better in my coal bets. Yeah, I like this one a lot. Super easy way to play coal. And Matt Warder was one of the guys that helped set it up. And then we got a super stink bid down here for $18. That's probably never going to hit. And BTU, Peabody. Okay, this one's up 7.9% for the week. This one was really frustrating because when it got down here and I was trying to run an option on this on Monday. And so I was looking at call options, and it was, I drew these lines before, and I had an interview with Elliot Gue in about 15 minutes. And so me and my buddies were trying to put call options in on this, and it was $90 a contract. And it said that the bid and the bid and ask was like 89 to 91. So I put $90 and it didn't fill. And then when I refreshed it, now it said the bid and ask was like 90 to 92. And I'm like, okay. So then I put 91, didn't fill. 92 didn't fill. 93 didn't fill. 94, 95, 96, 97. And I was like, okay, my interview starts here in like a minute. I gotta go. So I put 98. Good till the end of the day, good for the day, right? I do the interview, come back, and of course, it shot up while I was interviewing Elliot, and I logged on just before the market closed. And now, instead of it being, in the 90s, I think that, it was $132 a contract. I was like, dang it, I missed it. So now we're at the VRIC, and I wasn't looking, but my buddies were texting me today, and it got up to $165 a contract. So that basically would have been a double in a few days, which is a bummer because the expiration was April 17th, I think. I don't remember. It was like the middle of the week on a Friday was the expiration. I think it was April 17th. And so now they're going for, at least the last text I saw, I'm afraid to look. It's probably $190 a contract now. Anyways, long story short, I totally missed it. Hopefully you guys got it because we were talking about this, and I did not. All right, not that I'm bitter about that. Moving on to platinum. Platinum is interesting here. So we had a shot up on Friday and a little bit of a fib retracement. So loving this tool right here. See how it got right down there, not quite textbook to the 61.8, but good enough for government work. I mean, right down there into the 61.8 and then shot right back up. So pretty interesting there for platinum. Palladium, can't run a fib retracement on that one, but came right up here to the 200 moving average on the daily and bounced it and then just came right back down. Bias next week for Palladium is up, and bias for platinum next week is up. Nickel is up 3.3% for the week. So we basically have resistance now. If we kind of zoom back out on this, there's quite a bit of just, if you can follow that really light dotted green line right there, quite a bit of resistance where it is right now. So I think it's more likely that we kind of hit where we are now and then correct a little bit next week. We do still have a little bit of room here in the RSI. It's at 62, so it's not quite stretched into the 70s or 80s yet, but just dealing with or looking at how much price action there is around this level now, I think it's probably more likely that it goes down than up. And our favorite nickel miners ETF, the only one I'm aware of, that's why it's our favorite, is NIKL up 2.8% for the week. Hitting into some resistance, kind of the same thing as the nickel chart, hitting into some resistance where it is now. So if nickel retraces back down, then this will very likely retrace back down as well. But we might have a tiny bit more room before it does here. It's at 1061 right now. Might get up to like 1080, somewhere in there. And PIC, our metals and mining producers fund, is finally catching a bid. So had chances to place limit orders all down here, $35, getting it all in there. And then now we finally caught a bid. So got really low after this dividend here. I mean, look at the RSI down there, got down to 23. So paid the dividend, very normal for these to get sold off to pay the dividend. And then it just went sideways, finally caught a bid. And so bias for next week is up. Should be noted that we do have a little bit of resistance back here, but I don't think that's going to stop it. And Bitcoin up 10.3% as of this moment. So this is pretty exciting here. I really thought that we were probably going to be correcting back down here, getting back down to the $77,000, $78,000 level before we went back up above the $100,000 level. But that didn't happen. It broke through and above. So we see this level right here. We were at like 102, broke above that to 103, 104, 105. And yeah, I mean, looking pretty bullish. And what's also interesting on this is take a look at the RSI down here. So I drew this line a while ago, just generally sloping down. And this was kind of my base case. But look, it just broke right through. So momentum might be shifting here to the upside. I don't know. I still think it's going to correct back down, but in the immediate term, it looks like it's more likely up than down. Alrighty, well, I hope you guys got something out of that. Thank you guys for all your support. Thank you for always being here. Looking forward to doing all these interviews. I just did a quick short on some of the companies that are going to be out at the MIF and the VRIC. So be sure to get any questions that you have or any companies that you want me to interview, put them in the show notes of that short video. All righty, you guys have a great rest of the day, and be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.